We all feel so strapped and confined to what we've experienced in life. And then you start to get into some of these rooms with people that have done incredible things, and then they introduce you to their friends, and then you're going to dinner with their friends, and you start to just realize how many people are out here doing really big things, and how if you can bring value, if you can build the skill set and attach yourself to somebody further along the journey, it's just like a rocket ship, right?
It's such an important part of success, is surrounding yourself with people that are more successful than you. And in the fund world, I remember going to a conference where I met a guy who managed $10 billion. And I was like, wow, this is a big portfolio he's managing. And the next half hour, I got to meet a guy that had 30 billion AUM. The world is full of abundance if you're in the right circle.
This was the biggest game changer for me in terms of just being able to enjoy my day to day. If you are only worried about your next 24 hours, you will be in the process, you will be present, and you'll judge your happiness or fulfillment based off of checking those boxes every day. But if you're focused on something that you can't get for 6 months, a year, 5 years, 10 years, and that's what you think about all day, you'll just be miserable the whole time.
Justin Freishtat started his career knocking on doors, not for capital, but for customers. He stood face to face, family to by family, and a decade later, he would exit that business at $87 million in gross revenue. But here's what most people miss. Justin didn't exit for comfort. He exited for clarity. Now he sits at the intersection of capital and content, and he's managing millions across private equity, tech, and real estate. He's coaching creators on personal branding, and most importantly, raising money, not just with logic, but with story. Today, I want to go behind the investor deck and talk about fear, ambition, and the quiet pivot from approval to alignment. Justin, welcome to the show.
Hey, thanks so much for having me. This is going to be a lot of fun.
Let's jump into it. I'm very glad you're here. What did knocking on doors teach you about people that still helps you raise capital today?
I think the number one thing you learn from knocking doors, aside from, getting through your own fear and learning the discipline of doing hard things, is just how different people live. You start to see patterns about the decisions that people are making in their own homes, in their own life. And it just gives you a ton of inputs in terms of data so that you can kind of formulate the way that you want to live your life. When you're going door to door, sometimes I'd be in neighborhoods that the houses are worth $100,000, $200,000. You meet a totally different family than when you're knocking on doors of a $5 million, $10 million house. At a very young age, I was able to get into these people's lives, be a fly on the wall, and just understand what the world really looks like out there and how big and vast the possibilities are for you.
That's a cool approach to understanding perspective. What was it, a story, perhaps a moment where you thought, this is pretty cool, I'm going to hone in on one thing, or what stood out to you the most?
So for me, when I was going into people's homes, almost everybody would finance the product. We had a 3-year program. So I would see into people's financial lives. I was so interested in money. This is a decade before I did anything in the investment world. And I would see the credit applications, right? I would see what people bought their home for, what their mortgage balance was, what their income was, and what their car payments were, like all of these different things. And I started to realize that it doesn't really matter what things look like. People are living completely differently. I would go into a $5 million house where people were barely paycheck to paycheck, all the nice cars in the driveway, all of those things, and they were basically broke. And then you'd go into a $300,000 house and they had it paid off, 2 Toyotas, whatever, living in abundance, going on vacations. And those families had so much more freedom and their lives were less stressful. So I started to just realize how, things look. It has nothing to do with the way people are actually living. And I think that was very valuable for me to decide, okay, how do I want to build my financial future? How do I want to be in terms of, putting your whole life together?
I love it. I think I'm fascinated by personal finance as well. And I'm very much fascinated about people's choices, about how they show wealth. And I feel wealth is usually quiet. And perhaps that aligns with what you just said. The house might not look wealthy, but they are wealthy.
Yeah, and everybody's got a different definition of this, right? I've met billionaires that just could care less about a nice watch. And then I've met billionaires who like nice watches. So I don't think you can really judge someone from the outside. Are they flashy? Do they like Lamborghinis? Right? There's broke people renting Lamborghinis and there's billionaires with a fleet of them. So I don't think any of this stuff really fits a box. It's like wealth is quiet. Well, yeah, for some people, and broke is loud for some people. But I think you got to take that on a case by case basis and just realize that everybody's different. They have different interests, and everybody's willing to, live the way they want to. So there's just a responsible way to do it or not do it.
Fair point. Fair point. I agree. There's all the spectrum, yet perhaps what you saw was also what a healthy financial person was, whether they liked the flash or not, whether they were quiet or not. They were just who was healthy financially. Um, and going along with that line of thought, what was like a memory of money where you felt abundance or lack of?
For me, I think the most valuable moment for me was when I figured out how to make 30, 40, 50 grand a year and I could take care of myself. Like that was literally probably the most fulfilling moment I've ever had, because when you're figuring your life out and you just don't know what you're going to do, it's very difficult to have self-esteem, hope, or any of these things. And then once you figure that out, like the empowerment of being able to take care of yourself is, that's going to have an exponential effect on your happiness, kind of like making the first 100 grand is going to feel way better than when you go from 100 grand to 1 million. So all of these things have diminishing returns, and I don't want to discourage anyone from their goals and aspirations, but just understand when you're going through the journey, the leaps you get earlier on are going to feel a whole lot better than the bigger leaps you take down the road. And it's just funny how the mind works, because we all say, oh, I'll be happy when I'm a millionaire. I'll be happy when, and when never comes if you're waiting to be happy in the future.
I agree. And it's maybe why these big, hairy, audacious goals, famous BHAGs, are not something that people laugh at when they are told, but so many people fail at them, because at the beginning it might be interesting, it might be cool, it might be exciting, and your first win feels like a big win, but the subsequent wins are very diminishing returns. You don't really get that high anymore. It's just that goal starts becoming more like an illusion or mirage, and you start saying, maybe I shouldn't go.
Yeah, couldn't agree more. And that's the perspective you need to get. When I had huge goals and I focused on these outcomes early on, I would get there. And I think it's important to set those goals, but I was so obsessed with the destination that I completely missed the ride. And I didn't enjoy the day to day. I was killing myself for a future outcome. And I think that's a big trap that people get into with goal setting. So have the big aspirations, have the big goals, write them down, but on your day-to-day life, don't focus on those. Focus on what you need to do in the next 24 hours. This was the biggest game changer for me in terms of just being able to enjoy my day-to-day. If you are only worried about your next 24 hours, you will be in the process, you will be present, and you'll judge your happiness or fulfillment based off of checking those boxes every day. But if you're focused on something that you can't get for 6 months, a year, 5 years, 10 years, and that's what you think about all day, you'll just be miserable the whole time.
You preemptively answered which was my next question, is like, I think that you did something huge. Getting to $87 million in revenue is not a small feat. Like you said, maybe the first 100 was exciting. The first million in revenue was less exciting. But at 87, what kept you going? What was that motivation like? Was it discipline? And you kind of answered it now, but I want to know more about the cost, the emotional cost that was to get through that journey.
It was a massive price to pay. I mean, the things that we went through to build that company, it was a very difficult business, in margins, very labor intensive, lots of employees, lots of infrastructure. It was a lot to manage, and you can be doing $5, 10, $1 million in annual revenue and not be making a ton of money. It looks incredible. Everyone's like, wow, you've got this great business. And while that's true, it has nothing to do with what the day-to-day looks like, what the profitability of the company looks like. So, towards the end of that journey, when the pandemic hit, we were in organic food delivery. The whole world wanted what we had. And the company kind of went parabolic at that point. And then the margins penciled better than ever. Private equity wants to come in and buy your business. It was a perfect time to sell. So, the whole time, even at the end leading up to that, you still felt like you were in a massive struggle, working around the clock. All kinds of things are happening. There's all kinds of problems, equipment breaks. You've got all these customers with appliances that break, and you got to replace that. So you've got costs here. You've got customer service on a loop. It was extremely challenging. It takes all your mental space that you're not even really thinking about the exit. And then when it happens, it's this just huge culmination of all the hard work you've been doing for a decade.
And it's interesting. I don't know if you know this, but I have a very similar story as yours. I was in the organic food business. I exported Andean grains. And in COVID, I also sold my company. And when you say, you don't know what's going on behind closed doors, it's so true. It's just the grind is extreme. The difficulty is extreme. The problems are extreme. And when you sell, you kind of have a moment of changing of identity, or perhaps you don't know where you're standing. It's almost like they put pause on life. Was it like that for you? And how did you overcome that transition from running 100 miles an hour to suddenly you sold your company and now you have to do something else?
Yeah, it was very interesting. I went from going 100 miles an hour to 110 miles an hour. So I took zero break at all. In a way, you're completely right. The loss of identity is kind of panic setting in of, what am I going to do next? I got to figure this out. And then you have all this imposter syndrome, like, well, can I do anything else? I was really good at this one thing. Will I able to reinvent myself? And you have all these tough things you go through mentally whenever you're dealing with change. So I signed on to the new company that bought us for a 4-year term on options vesting. So I was still working in the business in the same capacity as whether we sold it or not at first. But I had in my mind that it's time to figure out what we're going to do next. So I was doing the same stuff I was doing before we sold the company. And then on top of that, I'm, working and researching and networking my way into the next opportunities. That's what ended up happening is, I found my first partners for the first hedge fund we launched. We did a private equity fund together, and those things started taking off extremely quickly. And I ended up leaving the prior company altogether. I left my options on the table, and I haven't looked back. And I've just been in the fund world since, and I absolutely love it.
Amazing. And before we go into that fund world and the private equity world, which is fascinating, just drilling a little bit deeper in, was there ever a point where you confused perhaps growth with worth? Or were you very conscious of, okay, this growth is actually going to make us better?
In terms of the growth making you better, I mean, I've got mixed feelings on this. Sometimes some businesses just aren't meant to be really big businesses. And that's okay, because you hit these break points in a business where to get to the next level, there's got to be a lot of investment in either infrastructure or team. And then you could go bigger and grow more and be less profitable. So I don't think bigger is always better. I think you got to figure out your identity as the entrepreneur, what you want your life to look like, what you're willing to sacrifice for what you're willing to get, and kind of put this equation together of how you want to allocate your time and how much responsibility you really want. Because the bigger you go, the more people that you take care of in terms of employees. And, it just gets more and more complicated, more and more stressful.
Yeah, absolutely. Now that you exited and perhaps had that imposter syndrome moment, or perhaps that identity crisis, were there some principles that you thought, okay, I'm not going to repeat this mistake again?
Absolutely. So I wouldn't call it a mistake, but I would call it, learning from doing in terms of going into the next thing. I had some non-negotiables in terms of what I would entertain, right? It had to be big margins, a lot of like recurring revenue model. What I realized is a lot of businesses, like, you live and die by your sales every day, and you wake up every day, it goes to zero, like a coaching business, right? Like you got to sell somebody into coaching every day for you to get paid. Whereas if you get somebody on a subscription model for Netflix, like the greatest businesses in the world are masters of low ticket. They get the whole world to give them $10 a month, right? And it hits every month. Cloud storage, like Apple or Google, banging your credit card for $9.99 a month on your cloud storage. Like these are the greatest businesses ever, because you bring a customer in once and they pay you indefinitely. Insurance models, you look at stuff like that, and then I say, okay, the next thing that I put my super hard work into, it needs to pay me in perpetuity. And you can do that in the fund world because it's just money going into investments. So there's no, product fulfillment. You don't need a big infrastructure, a gigantic team. We can run a 20, 30, $40 million fund with 4 people and some contractors. It's a completely different amount of effort and infrastructure to get a even better result than the previous vehicle. So I think the vehicle you choose and what business you go into is the most important decision you'll make. It's not about how great you are at business. It's really about being great at business, but in the right vehicle at the right time.
It's like I said, we are very parallel because after I sold, I created my own fund and I had the same principles. I was like non-negotiable. I don't do low margin anymore because that low margin, especially when I was doing commodity, basically any mistake was ate up my margin. I was on a loss. And the capital it took to buy inventory and all that, I was like, this is, even if, like you said, even if you're good at business, and if I sold to the whole world, I still wouldn't have made enough money. That was like my signal that, or at least my confirmation that I had to get out of that business. When someone offered to buy it, I was like, should I sell? And that's where my mind went. Like, if I crush it in this business, I'm still not going to make money. Whereas in the fund world, bigger doesn't mean better. This is something that I fight all the time. I don't know if you agree, but also the business model itself is a lot more leveraged, and you can leverage not only money, but you can leverage connections and people and other people's infrastructure, other people's business models, other people. It's endlessly leveraged. So that's something that really attracted me.
Yeah. Like, what's the value of your customer? In the direct sales business, door to door, for me, for what we sold, it was 5 to 10 grand. That's what a customer acquisition was in terms of gross revenue. And we were driving to people's homes. Like, so there's all this travel time. So the effort for the result was astronomically different than I can get on a Zoom meeting with a potential investor that will wire $1 million. It takes 30 minutes. I didn't even leave my house. It would take us, a month to do that much revenue and a ton of low ticket sales. Like, I mean, people classify 10 grand as like a high ticket sale. I just don't agree with that. It's still pretty low ticket to me, but I don't know. We need to reclassify like low ticket, medium ticket, high ticket, what it all means.
For sure. I agree. And so once you sold, you're starting this fund business, you did a hedge fund, then you did a P structure, a P fund. What was your thesis? What were you looking for? What did you think was like, okay, I can dabble into this industry? Or why did you feel you had an edge?
So for me, it was staying to my identity, what my skill sets are, and again, a better vehicle. So I know that I'm great at sales, marketing, relationships. I don't want to deal with ops or, any of the back end stuff. So if I can find great partners, like, I've never done anything 100% on my own. I've had a partner or multiple partners in everything, and I like it that way. I want people wearing, one hat that they're incredible at and putting them together. So just because I could do underwriting doesn't mean that there's somebody who's better at underwriting I can bring in, right? Same thing with, sourcing deals or lead generation for capital raising. It's like we put these pieces in place of better people. It's kind of like 1 + 1 should equal 3. That's kind of my thesis there. But in terms of the investment thesis, in the beginning, when you don't have a track record, the smartest thing to me was to go fund to fund with a fund that has a massive track record so that I could leverage that in the beginning until, I had enough track record that we could raise capital into our own deals. So that's what we did in the beginning. We had a very great relationship. My partner, Cody Kearns, had a neighbor that he played basketball with that was a managing director at a $5 billion firm. And he gave us a shot and gave us a fund-to-fund access to the cap tables of some of the greatest investments in the world. So we were raising for late-stage private equity companies like SpaceX, Flexport. I mean, their previous exits were Palantir, Spotify, Airbnb, pre-IPO on those unicorn companies. So to get access to that in the beginning was huge for us, where we could say, hey, our fund-to-fund partners got 500 million sitting on the cap table at SpaceX. We've got about 3 million more we can allocate to that. You go to an accredited investor and give them access to something like that, not something normal that's accessible to accredited investors. That's usually qualified purchasers and up from there.
I love it because I agree that the biggest problem in the fund world, or at least P world, is access. How did you know which ones to back? Was it only levered on the expertise of this firm, or when did you start to say, I need to look at my own thought process? And when you raise money you've raised for tech, real estate, and AI safety, do you look at the numbers? Do you look at the narrative or the team? What's more important to you?
I'd say it's different for every single one of those. Like Safe Space for me, that's the publicly traded company I'm an advisor to. That is an early stage company. Yes, we're public, but we're on the pink sheets planning to uplist shortly. But at this stage, you're betting 100% on the team and the ability to build the product and then implement and sell it across these verticals. So I'm looking at the team being, we've got, our chief revenue officer leaves Google as the head of sales enablement, like a 7-figure type position, selling his Google stock to invest in this. And then, our CTO sold a business for 1.5 billion. Like, these are all people who don't need money. They don't need to be here. And they're all coming together to build the next AI unicorn. That's something I would get in on early stage. When we're looking at late stage, it's number one track record, because I have to go fund to fund. So it's the track record of that fund. And, 20 years of never losing money on an IPO is kind of crazy. But the way that they buy is wholesaling, the same way, people wholesale houses. If you got a $1 million house, you could buy it for 500 grand. That's a great deal every day of the week. The money is usually made when you buy in real estate. Sort of the same thing with late stage private equity. So, if Andreessen Horowitz and SoftBank are putting $1 billion each into Flexport at $14, and then we have the opportunity to buy it at $7, I think that's a pretty good deal. So you look at things like that, and you want to buy things that are on sale. But to answer your question, yeah, you look at everything across the due diligence board.
And what was perhaps the most surprising thing once you came from a previous company and then you came to private equity? Was something that really was a revelation, and you thought, oh, if I knew this, I would have been a better businessman?
I think just how radically abundant the world really is, like just how much opportunity there really is. We all feel so strapped and confined to what we've experienced in life. And then you start to get into some of these rooms with people that have done incredible things, and then they introduce you to their friends, and then you're going to dinner with their friends, and you start to just realize how many people are out here doing really big things, and how if you can bring value, if you can build the skill set and attach yourself to somebody further along the journey, it's just like a rocket ship, right? Like if I tried to come into the fund world on my own, I think I could be successful doing it, but I certainly wouldn't be doing a $4.5 billion deal, 2 or 3 years into this journey like we are right now with the Bend in Chattanooga. And that's only happening because I'm partnered with someone who's been doing this for over 30 years, who's done billions on Wall Street, has gone public multiple times. So, the most valuable thing I learned is I spent too much time just building my business and staying in my lane instead of getting around people that have done astronomically greater things than I ever even dream of doing. So there's been immense value in just being around these people and just learning how possible it really is for really any of us if you really, really want it.
I could not agree more. I think that's I'm going to tag that. I'm going to clip this because it's such an important part of success, is surrounding yourself with people that are more successful than you. And in the fund world, I remember going to a conference where I met a guy who managed $10 billion. And I was like, wow, this is a big portfolio he's managing. And this was like a speed dating type of, get to know people. And the next half hour, I got to meet a guy that had 30 billion AUM. And I was like, oh my God, this other guy now looks like smaller. And the next guy had 90 billion AUM. And it's when my mind was like, I didn't even know these things existed. Like, and these are guys that are, I wouldn't call them normal because they're definitely very successful. But at the same time, they have 2 hands, they have 2 feet, they have 1 head, they breathe, they're in the same world. It just opens your mind to the possibility and the abundance that you just mentioned, that the world is full of abundance if you're in the right circle.
No question. It's the most undervalued thing there is in investing is in proximity. Like if you've got 5-10 grand, invest that in getting the front row seat at the conference in your industry you want to get into, where you can meet the people already doing it. Like that'll be way more valuable than any of the books you can read, any of the podcasts, or, taking that 5-10 grand and then trying to like flip a house with it. It's like, that's not going to give you the ROI of investing in yourself in proximity to people that can help you on that journey.
Yeah. And this is the first time I changed the name of the podcast to Return on Identity. You said ROI. And I think it's an important distinction of ROI is you can have ROI in the house and you buy it and you fix it up and you flip it and you have a return on investment. But when you go to that conference with that same money and you sit next to this group of people, your identity, your vision, your perception will change so much that is unquantifiable. It just becomes exponential. And I'm happy that you mentioned, and it triggered me to say this part.
Yeah. And the second piece of that is becoming a person of interest, right? With your personal brand. Like, you want to put steroids on your networking, build a personal brand. Like, that's the most valuable thing I've done to get access to everything that I'm doing now. All the people that are my partners. I don't think any of this would have happened. I definitely wouldn't have raised all the money I've raised if I hadn't gone all in on building my personal brand. Like, that's been everything.
Let's go into that. How did you start your personal brand? What do you think was the biggest leap that you made once you made that decision? Because I know I started my personal brand. There was so many questions more than answers. But what was it like for you? And what was one thing that made it leap?
So I think I started around 2020. It's only been about 5 years since I really even like thought about figuring out the personal brand. I just saw all these kids online that were 10 years younger than me making millions of dollars from their phones. And, I'd get on Zooms with them and ask them questions. And I'm like, wow, this is like a real thing. And I'd come from the real business world where we didn't have social media, back in, let's say, 2005, 6, 7, 8, 9, 10, right? So, I mean, we did call centers, we did billboards, we did TV, we did direct mail. Like, I've done every form of marketing and advertising there is in the real world. And then you look at the digital space, like when Facebook ads came out from 2015 to 2018, we doubled the size of our company off of them. They were incredible. And then it got more and more expensive and more diluted and harder to make those ads pencil. So then it went into where we are now, which is the organic personal branding marketing strategy, which is the least expensive. And that's why I'm so passionate about this, because if you're early in the journey and you don't have a lot of money to spend on marketing, you got to go grind it out on social media. You need to be the brand. And then you take that to the next level. Companies that do spend money on advertising, even the biggest publicly traded companies in the world, if their CEO does media and is in the media, they have higher valuations, they have higher sales, they have higher everything, because people follow people. People want to do business with people. So unless you have the money to build a brand like Coca-Cola and spend hundreds of millions of dollars on your branding, you need to be the brand. And I understood that, and I hired a company called Kearns Marketing, and this was in 2022 when it really took off. They were who I thought was the best to build a personal brand. They're now my partners in our marketing business. But so Cody Kearns and Sergio Triconis built my personal brand back then, and I had been doing it in the food business, right? So a big misconception people have is like, I'll start when, or I need to make a new page because I'm pivoting. It's the complete opposite. You let everyone see your journey no matter what happens. So when we sold the food company and I went into the finance world, I just changed the kind of content I was putting out, changed the bio, changed everything, and you keep going with your personal brand. The amount of people that were following me for health and wellness and organic food that became part of my next thing was a lot. And I didn't expect that, but it's because people love to watch the development, the journey. They trust somebody that they've had proximity with, and that's a much easier sale to make than cold calling or any of these other things that people do who don't have brands. So that's when it took off. But the most pivotal thing I did was leveraging the brand to get on podcasts, to build relationships with high-level people, speak on their stages, do events together. And that's ultimately how I raised my first 10 million in the first year. I'm raising capital and I had never done it before.
I find it amazing, your clarity, because it's really, most people think the opposite of what you just said. They think, when I'm famous, then I'll post. I'm like, you won't get famous if you don't post. Or they'll say things like, but I'm terrible at social media. You're like, good, because no one's going to watch it at the beginning anyway. So who cares? You'll get good as you do more, and then the following will follow. It's just the progression. I feel people have misconceptions there. And I think you broke it down very clearly. That one, it's the best investment you can make. I agree. And second, you use a mentor, which is, or a coaching system, which is definitely a shortcut to finding like your footing at least. And then third is take people on a journey. I love that. I think that people want to know that a guy from school can make it big, or a guy that was big can make it even bigger, or a divorced person can then redo their life. We're all looking for narratives. And I think you're very big on that. You're very big on the storytelling. And Does that come from social media? Where does that come from?
I think, yeah, I think it comes from doing a lot of social media. But I mean, we're all just trying to figure out what to do with our life on this planet, right? Like we're all in that same boat. So when I have these mental breakthroughs, and whenever you get to a new level, you're qualified now to help the person you used to be. And all the people that I want to help are stuck in a negative feedback loop they're just getting in their own way. So that's why I like to talk about those specific things about how you're in your own way, because I really truly believe that that's 99% of people are not where they want to be because they are their own roadblock.
Yeah, yeah. But I have a few people I know that I'm going to send this to and say, you're too smart for your own good, because their head is the one that's getting, and they try to outsmart their smartness. So it's just like, it just doesn't work that way. And just letting go and perhaps being more open to being a beginner could help them.
Has to be. Like, how are you going to be able to do something you haven't done before? How are you going to be good at something you've never done before? It's like the rite of passage is, and the indication to go is because you suck. Like, how else are you going to get better?
And it's also like, tennis is now becoming more popular, and you see these guys, like, they can put the ball on a dime, but the first time they held a racket, it wasn't like that. And because they've developed so much that they've gotten to that level, and you will never be anywhere in that spectrum if you don't hold the racket and hit the ball the first time.
Isn't it something like, I can't remember who was it, like Federer said, like he's the best ever, and he at 53%, like literally almost failed half the time, and he's the best to ever do it. It's like the Hall of Famer baseball player that, gets out 7 times out of 10. It's like your ability to lose frequently and be okay with it and keep moving is everything.
For sure. Another thing that strikes me, especially on your Instagram, is you talk a lot about consistency and discipline. When did that become a non-negotiable for you? And not necessarily as a tactic, but more as an identity?
Definitely when I did door-to-door sales, I had a chip on my shoulder when I figured out, like, it was the first thing professionally I'm going all in on. And I kept aggressively anal spreadsheets on daily activity that adds up to the weekly, to the monthly, to the annual goal, reverse engineer everything. And if I was not tracking to my target, I would work Saturdays and Sundays. I would go weeks at a time, months at a time without taking a day off because I wasn't on catching the schedule. So, I mean, discipline was formed out of just, I wanted to win so badly. I played hockey in college, and then when I dropped out, kind of lost another identity of sports, and sales became the sport I wanted to go pro in, because it was quantifiable, it was measurable. You would get out of it exactly what you put into it. It's why I've never wanted a salary. Like, I would be so demotivated by the fact, wait, you're going to pay me no matter what? I just wouldn't work. Like, that's just how I would be. And I know that about myself. So yeah, I turned it into a game and forged those capacities and disciplines, and then took those same principles and said, okay, how do I duplicate these principles into other areas of my life, whether it's fitness or anything else. And then eventually it becomes a discipline of, okay, well, how do I take a day off? Like, that's a different type of discipline.
Yeah. And very interesting. I find that, do you think there's two types of people? The people that they need a salary in order to even get out of bed. And then there's the people that if they had a salary, they wouldn't leave bed.
Yeah. I think, that's the whole dichotomy here is like, do you even know that about yourself? Like, are you even auditing that? Are you even trying to figure it out? Like, who am I? Like, what's the best vehicle for me? Right. And it's just very difficult to figure those things out if you're letting life happen to you instead of forcing your life onto the path and being genuinely curious to figure out what that path should be. Like, I could have easily just been like, this is great. I'll just do direct sales and make 200-300 grand a year. Like, a lot of people quit on, like, the ceiling on their life is way before that. And for whatever reason, I just had this ability to look into the future and say, I think I can do it. And if I can, I must. And then I just get started.
Beautiful. So let's talk about risk a little bit, because I think that's the biggest word in investing. It's probably what everybody's trying to figure out and contingency plan and understand. Did your approach to risk differently after your exit?
I'd say so. Yeah. I had an idea of how I wanted to take that big paycheck and diversify it and be as safe as possible and protect it. You know, you don't want to, like, you go to a new level, you want to protect the level and then build from there. And it's just funny because by being so defensive and being like, well, I think real estate's the best place to put all this, I made some terrible real estate investments in 2022. Not that they were bad deals. It's just, it's been the worst period for multifamily real estate in the last 100 years. And I just happened to exit and get involved in that space at that time. So got a bunch of deals that are struggling that don't seem so safe right now. Whereas I was like, I don't want to deal with the volatility of the stock market. I'm definitely not going into crypto. You know, like these were my mindsets, and it's been completely the opposite. So I think sometimes avoiding risk is the riskiest thing you can do.
I see that all the time. My company specializes in exited founders' access to real estate and to sometimes managing their family office or helping them set up a family office. And what I do find is the same thing. They were super risky as a entrepreneur because they jumped off a cliff like every entrepreneur does and learned to fly in the process. And once they're flying, they want to do protection, everything. And then I wouldn't say it's always, but more often than not, it can be more detrimental not to embrace the risk instead of, like you just said, like going safe made it more risky.
Yeah, and it comes back to, like, I'll use Ray Dalio's all-weather portfolio as the example. You know, it seems kind of crazy to put 15% of your total allocation into commodities, but you know, as you've seen different cycles in markets, different things perform adversely. So, you know, if you've been in commodities the last 5 years, you've absolutely torn it up because of inflation, right? Even stocks have done well, you know, so it's, look at crypto, right? So I think having a diversified risk capital allocation is actually more important, because when crypto is crashing, maybe commodities are way up and things are ebbing and flowing. So your total portfolio is hedged in that sense. Whereas if you get too concentrated in one asset class, no matter what it is, you're going to have big highs and lows inevitably. And that's been a big lesson for me.
Very, very important. And I actually think that, and I'm curious to know what's something that people misunderstand about capital, and that it's not just about money and not just about picking winners, but what you just said. It's like some people, when you form a portfolio and 15% of it is underperforming, their immediate reaction is, let's move it to what was really performing. And you're like, well, that's exactly what you shouldn't do. What type of things have you seen that people misunderstand about capital?
Yeah, I mean, on a basic level, I think the concept of cash, you know, I do think you should have a decent amount of runway for, you know, anything that could happen in life, some cash. But people that are scared to invest don't understand that their cash is losing money rapidly to inflation. So, you know, if inflation is 2, 3, 4, 5%, like that's your baseline. So if you put your money in a money market because it's safe and you make 3%, you're just breaking even on the cost of living every year. So it's a mindset of, I know I have to go on offense, but I want to be responsible about it.
Yeah. And I think you said it better than most people understand it, because everybody, I think, understands inflation is eating up their savings, but it's just to the standard of living. It's not necessarily to your aspirational goal. It's not necessarily to your standard of living. It's not necessarily to where you want to go. So it's just to the norm. So I think that was an important point. Even though you're very big on social media and personal branding, what part of your work doesn't show up online, but it means everything to you?
Well, that's a great question. You know, there's a lot of things that we do that I don't put online. A lot of it's the marketing business. We work with lots of companies. I mean, I'll put up some stuff on the, you know, growing of the Instagram, the basic stuff, but you know, we do a lot of things at Kearns Marketing that we don't really talk about. Like, we build out full CRMs, agencies, we white label our products. So, and I'm brokering deals all the time behind the scenes. It's like, who do I know that needs who, connecting people. You know, so I have all these things that I keep the social media to the main things. I almost think it's too much. Like, you really want to have just like one, maybe two offers or things that you do on social media. I have 3, which, you know, kind of feels like at times I'm diluting the message to my audience, but at the same time, you want to be as authentic as possible about how you're portraying yourself and the things you are doing. And I do try to live out loud as much as possible so that, you know, people can see what's possible for anybody. And I love people that do that. Like, if you get complexed by your success, you're robbing the world of what's possible. And all of us need to show more people that this can be done You don't have to settle, and you can go through losses. Like, I post about the tough stuff. I don't hide from anything. It's like, hey, like I got wiped out and had to rebuild, and I'm all the way back. And it's like, risk and loss it's actually a beautiful thing, because you don't get to find out who you are until you go through something like that. So if you play it safe your whole life, you'll never even know who you are.
And then you won't be able to differentiate which ones are good and bad as well. And going back to, or maybe even drilling a little bit more into what you said, that you do a lot in the marketing space, you mentor a lot of creators and entrepreneurs. What conversation do you hope they start thanks to what you're leading?
I just hope that they live out loud and stick to the script. Everybody's trying to craft a narrative and it doesn't work. You need to just authentically live out loud. It's the number one thing that I tell marketing clients. The other thing is, stop looking through the lens of the entrepreneur, right? Like, we see the world and we see everything very differently than the consumer does. And you have to put on a different hat, right? Like, they're analyzing the packages and like what we do, how we do it. And they're like, well, this is going to this. And I'm like, yeah, but like, you're fighting against what this guy just did $1 billion in mortgage sales. And you're telling me that's not going to work for you for X reason. You don't even have 10,000 followers. It's back to just people getting in their own way. If you're going to work with someone who's an expert, which you should be looking for experts, surrender. Just do what they tell you, master what they know, and then pivot from there. But why are you fighting people on the way in when you haven't even done it yet?
I love it. I think there's so many people that go into the doctor's office to tell them what's wrong with them. It's like, why did you go to the doctor's office in the first place? And I like that, because I believe that the shortcut to life is working with people that are better than you, and then listen. If you don't listen, then how can you get the shortcut? There's no way. What future bet are you making on yourself or on the world that you are very bullish on?
I feel like we're in a once in a generation period right now for artificial intelligence. I mean, who knows how many, but we are going to see a massive amount of unicorns in AI. And that's why I joined Safe Space. That's why I wrote a check. I'm an investor in the company. And when we look across the biggest companies in the world, like an NVIDIA trading at, I don't know, I got to look like 50 plus times, right? The greatest valuations of public companies are AI SaaS companies. The second behind that is SaaS companies, software as a service, for those who don't know. And for me to have an opportunity to get into that space at the ground level of a company that's building a worldwide sales team to solve worldwide problems, biggest addressable market I've ever seen. It's just, the sky's the limit. I do think there's a couple times in your life where you're going to have a chance to have that exponential success, and you have to be willing to jump when you get that opportunity. So I'm all in on the space. I'm all in on the company. And this should be the biggest thing I've ever done.
Amazing. Justin, it's been a pleasure to have you. I think you're so open and generous with your knowledge, and I appreciate that so much. I do have one more question for you, though. What would you say to someone that's quietly failing but still showing up?
Good.
Good.
Yeah. I mean, I used to be like, man, like, I want to like help, give people motivation. Like, I hope you win. I hope you succeed. It's like, that's great, but I actually hope you fail miserably. Go through that process, rebuild it, do it again. Don't quit. And what will come out of that will be a person, a human being that you'll be so grateful for, that you're going to be glad you went through it. So if you know that that's what happens, because every person I respect that's done bigger things than me has bigger failures than me, they're all so grateful for it. So if you know that, why not be all in? Why not go as hard as possible? It could explode. It could be exponential for you. And if it goes to zero or fails or whatever, you get the greatest experience ever of building the resilience and doing it again, and being the exception to all these rules. Yeah, like, fail hard, fail fast, try to blow things up, especially if you're young, like, blow it out, and you might find yourself in an incredible place you never saw coming.
Love it. Beautiful, beautiful way to end the podcast. Justin, thank you again for coming. And hopefully we can do it again in 5 years, because I know that what you're working on is inspirational. It's important. And with the AI stuff, it could be exponential. So thank you again for coming.
My pleasure. Thanks for having me.